If you're new to investing and don't know where to start, or you're scared of losing money, this video is for you. Because the truth is, investing is way simpler than most people make it out to be. You don't need to be a finance expert, and you don't need thousands of dollars to start. In fact, with just $100 and the right mindset, you can begin your investing journey today. So in this video, I'm going to break down exactly how beginners can start investing, avoid common mistakes, and build wealth the smart way. Even if you've never done it before, let's dive in. Why you should start investing early? You've probably heard someone say, "I wish I started investing sooner." There's a reason for that. Let me give you an example. If you invested $100 per month starting at age 20 and earned an average return of 10% per year, you'd have around $630,000 by the time you retire. But if you waited until age 30 to start, you'd only have around $270,000, even though you invested the same amount each month. That's the power of compound interest. The earlier you start, the more your money works for you. What you shouldn't do as a beginner. Most beginners make one of these three mistakes. They try to pick hot stocks. Everyone wants the next Tesla or Amazon, but trying to guess which company will explode is just gambling with a suit on. It's exciting, but risky. They listen to hype. TikTok, Reddit, YouTube. The internet is full of experts with zero accountability. If someone tells you a guaranteed win, run. They wait too long to start, waiting for the perfect moment. To invest is like waiting for the perfect wave. You'll miss all of them just standing there. What you should do instead? Here's the truth. The most successful investors don't chase trends. They invest in boring, reliable, long-term assets. And the best place to start, index funds. Think of an index fund like a shopping cart filled with tiny pieces of hundreds of the best companies. Instead of buying one risky stock, you buy the whole market. This gives you instant diversification, which means if one company goes down, it doesn't wreck your entire portfolio. 3 index funds beginners should know about. Let me show you 3 simple options anyone can understand. No financial degree required. 1. S&P 500 Index Fund. This fund tracks the top 500 companies in the U.S., from Apple and Google to Coca-Cola and Nike. Over the last few decades, the S&P 500 has returned an average of 8 to 10% per year. That's enough to turn small, consistent investments into a big portfolio over time. You don't need to find the next big company. You're already investing in all of them. Popular options. In the U.S., VOV, FIAX by Vanguard. In the UK, VUSA. These funds have ultra-low fees, which means more of your money stays invested and grows. 2. Total Stock Market Index Fund. This is like the S&P 500, but even bigger. It includes almost every publicly traded company in the U.S., from giants like Amazon down to small startups. Over the last 10 years, these funds have returned around 12 to 13% annually. Popular options: US, VTSAX, or VTIUK, VWRL. If you want maximum diversification and don't want to worry about choosing between small or big companies, this one's for you. 3. Emerging Markets Index Fund. This is for investors who want a little more growth potential, but also understand the risk. Emerging markets include countries like China, India, Brazil, economies that are growing fast but still developing. You'll get access to companies that might not be household names yet, but could explode in the future. Popular options: US, VX, UK, VFEM. This shouldn't be your first investment, but it can be a great way to diversify once you're comfortable. ETF versus index fund. What's the difference? Great question! Index funds are like mutual funds. You buy them once per day at a set price. ETFs are like stocks. You can buy and sell them anytime during the trading day. Both do the same thing: track an index, but ETFs are usually better for beginners because you can buy fractional shares. You can start with as little as $10. You don't need to wait for the day to end to make a trade. If you're just starting out, ETFs are simple, flexible, and cost. How to start investing. Here's how you can start with just $100. Choose an investing platform, look for low fees, fractional investing, and user-friendly design. Good options: US Fidelity, Vanguard, Charles Schwab UK. Free Trade Vanguard UK. Trading 212, open a brokerage account. It takes 5 to 10 minutes. Just like opening a bank account, search for a fund example. Type in VOO or VTI to find the ETF. Invest your money, start small. $25, $50, even $10. The goal is to build the habit. Set up auto investing, automate it. That way, you're investing every month. No emotions, no second guessing. Is investing risky? Here's the truth. Not investing is the biggest risk of all. Inflation eats away your savings every year. That $1,000 sitting in a bank, it'll be worth less next year. But if you invest smartly in broad, diversified index funds, you're not betting on one company. You're betting on the long-term growth of the economy. Yes, the market goes up and down, but over time, it always trends up. Look at history.com, crash, 2008, COVID. Every single time, the market bounced back. Stronger than before. When should you sell? If you're a beginner, the answer is don't. Only sell if you need the money for a real emergency, you made a bad investment and need to cut losses, you've hit a specific long-term goal. Otherwise, hold. The longer you stay invested, the more your money compounds. Final thoughts: you don't need to be rich to start investing. You just need a long-term mindset, consistency, and the courage to take the first step. Start with what you have. Learn as you go. And remember, every successful investor was once a beginner. So if you've got $100 and the willingness to learn, your journey starts now. Subscribe if you're serious about building wealth and escaping the 9-to-5. And if you want to see how I personally choose my index funds, check out this next video. But don't click just yet. Make sure you hit like so the algorithm knows you're serious. See you there?